The 1920s were a time of prosperity, innovation, and optimism, a decade that became known as the Roaring Twenties. But beneath the shiny surface of economic success were cracks in the foundation of the American financial system. In October 1929, those cracks closed, leading to the stock market crash of 1929, a catastrophe that marked the end of an era and the beginning of a new. By the mid-1920s, the stock market was booming. Millions of Americans, from seasoned financiers to ordinary workers, were pouring their savings into stocks. Many even bought stocks on margin, borrowing money to invest. It seemed like a surefire way to get rich. But this rapid rise in stock prices was not driven by real economic growth. Instead, it was driven by speculation, an unsustainable bubble waiting to burst. The warning signs were there in September 1929, but few people paid attention. On October 24, 1929, known as Black Thursday, panic set in. Nervous investors began selling their stocks en masse, causing prices to plummet. The big banks tried to stop the panic by buying stocks to stabilize prices. For a while, it seemed to work, but the relief was short-lived. On Black Monday, October 28, and Black Tuesday, October 29, the market crashed. More than 16 million shares were traded in a single day, an unprecedented volume. Stock values evaporated, wiping out billions of dollars in wealth. The crash wasn't just a financial crisis, it was an economic disaster. Many banks had invested heavily in the stock market and were unable to recoup their losses. As banks failed, businesses collapsed, and jobs disappeared. By 1933, 25% of Americans were unemployed. The stock market crash triggered the Great Depression, a global economic downturn that lasted more than a decade. The crash of 1929 exposed the dangers of unregulated markets and excessive speculation. In response, the U.S. government enacted reforms such as the Securities and Exchange Commission to restore confidence and stability in the financial system. The stock market crash of 1929 serves as a powerful reminder: economic booms can quickly turn into busts, and unchecked greed has devastating consequences. Its lessons still resonate, shaping how we protect our financial systems today.